Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today, we are going to be covering a collection of things, but things that are very important and significant to the crypto space. We'll be explaining why they are significant and what the ramifications of them potentially could be for our industry. We're also going to be highlighting just how early you are in regards to being a speculator on the cryptocurrency market. This asset class hasn't even been recognized as that, and there's no regulatory framework surrounding it to really propel it into the stratosphere. That is all still to come, ladies and gentlemen. Today, I want to look at a Bitcoin ETF, and actually an ETF broadly for the cryptocurrency space, and why it's such a big deal. We're going to be showing some examples of ETFs for the S&P and what happened to the S&P's price shortly after, and of course, gold. Now, ETFs are typically, anybody can buy an ETF. We have ETFs of most things nowadays, but ETFs are a really good way actually for big companies and institutions to buy in a regulated manner baskets or certain stocks. Now, Bitcoin doesn't have one of these, typically because of regulations, or mainly because of regulations in the US. There is one in Canada, and there is indeed one in Australia. Australia are also first on a gold ETF, by the way. We're going to look at gold and the S&P, of course. However, I do believe we will get one in the United States, and actually this is going to open the floodgate for institutional investors. Right now, institutions and banks cannot get into the cryptocurrency market because it is not regulated in the United States and actually in many parts of Europe. However, we'll also look, and this is why I want to talk about where we're really early in regards to the crypto space, at an article that the BIS has essentially published talking about banks in 2025 being able to hold 2% exposure to the cryptocurrency market. And we're going to look at global money out there and really just highlight how early we are in this very significant and world-changing space. So without further ado, guys, let's kick things off by talking about an ETF. Now, why do I believe an ETF is very, very relevant? Right now, we have a number of ways companies can gain exposure to Bitcoin. There is a CME futures for Bitcoin, which doesn't, the futures, the difference between a futures like the CME and an ETF is that the ETF would have to hold the Bitcoin. Futures do not have to hold Bitcoin. They just speculate on the price of Bitcoin. You don't have to actually back it. Whereas a ETF would actually have to purchase physical Bitcoin, and the more demand, the more Bitcoin they'd have to add and shares they'd have to issue, and vice versa. People could redeem those ETFs shares for the underlying Bitcoin. So this is a huge deal, and this is going to allow institutions that clearly want exposure, whether that be BlackRock's Aladdin setting up and partnering with the Coinbase to set up an institutional crypto arm, or whether that be Fidelity and the Bank of America indirectly gaining exposure through MicroStrategy. Do you really think people want to buy MicroStrategy over Bitcoin itself? So there's clearly a demand for it. And an ETF, we've got GBTC, for example, which is interesting because GBTC, yes, there is Bitcoin that backs it, but it trades at a discount. So every share does represent Bitcoin that you actually can't redeem. You can't redeem GBTC yet. However, this can actually trade at a discount. So an ETF really would be game changer. It would give people direct exposure to Bitcoin without having to gain it in via a different route. And it would actually be huge. And actually, I want to talk about, let's do the S&P, which essentially launched their first ETF, the first ETF in the United States, the Spider, very popular ETF, spiders. There's lots of different spiders. They launched their ETF in 1993. And I want to take us over to the S&P 500, which is an ETF of, and actually look at what happened in 1993 and what the price did very, very shortly after. So I think the date was January, I believe, 1993. Which is down here. And you can see the epic run that ensued shortly after, ladies and gentlemen. So this is extremely significant. This was some extreme growth. An ETF undoubtedly helped it. An ETF would be very, very positive for Bitcoin's price, I do believe. And then, of course, maybe once as a coincidence with an ETF being launched, you'll typically see this trend. When something gets an ETF, perhaps barring the Nasdaq in the 2000s during the dot-com boom and bust, although it initially did very well, and you could argue actually an ETF has contributed to lots of money that's gone into the Nasdaq. The first gold ETF was, of course, launched in Australia in 2003. And then, of course, we had on November the 18th in 2004, you have the Spider gold shares launching again, which saw a huge uptick. And this was 2004. Let's go over to the Aura chart of gold and see what impact it had on its price. And then we'll look at just why you're so early. So this, I already have it mapped out. You can see that gold went on a pretty epic run as a result of this. Now, I'm not quite sure what gold's market cap is today. We will look at it in just a second when we get into this article, which I found very interesting. It really highlights just how early you are. But an ETF is going to be extremely positive for the Bitcoin price. And the reason being is because and the demand is there, ladies and gentlemen. We're just waiting on regulatory clarity, which is the reason we don't have products that all these big sort of NASDAQ and JP Morgans are all chomping at the bit to start facilitating to make the commission on. Because of regulations, we just don't have the sort of go ahead for an ETF. However, they've approved a Bitcoin futures ETF, or not futures ETF, a Bitcoin futures, which is not actually backed by anything and arguably more risky. So this will come. I do think Gensler is just stalling. ETFs will be extremely significant and have a large bearing on the price, in my opinion. And ultimately, this is a reality that we've got moving forward. This was an interesting article that we actually last year or the end of last year looked at. And the article title, Central Banks to Set Standards on Banks' Crypto Exposure. The new standard limits crypto reserves among banks to 2% by 2024 and goes into effect on January the 1st, 2025. Now, we read an article yesterday looking at ISO 20022 standards. They reckon 80% of volume in regards to large payments will go through these kind of standards. They're already partnered with the likes of the Bank of America, the Fed, they're set to partner with, and others. They have a roadmap that also comes into this kind of time period of 2025. And this talks about 2% being able to be allocated to the crypto space. That is currently not the case. And if it was, the amount of money that can still flow into our very small but significant market, we'll go on the total too and see where it is today, at 1.1 trillion. This asset class is going to be in the tens of trillions. And even just if banks decide to hold Bitcoin, this doesn't talk about institutions and all the money that's out there. And the interesting thing with Bitcoin and the cryptocurrency market is, and we've always said this, it's almost like divine how it came around, just as the cracks were showing the real cracks were showing in the financial system in 2008. But right now we have debt markets deemed as almost going towards junk. And the debt markets are the largest markets in the world, bigger than the money supply, bigger than the stock market. This is global debt, which would have grown significantly since this article was published. And this sits at $3 trillion. Now, mostly banks hold debt. This is why we've seen some of the banking issues that we have seen, whether it be in the US with the gilts market and Bailey having to step in, or whether it be in the US with SVB and First Republic and a number of others. We're at 1 trillion. Let's just say banks did allocate 2% to Bitcoin, perhaps. And I do think that will be higher the more and more it comes to its own and the more regulating kind of frameworks and on-ramps are for it. But let's say crypto does become what we believe it is and it becomes a real asset class. You will see, I reckon, more than 2% flow out of debt into it. And that's 6 trillion alone. That's just the debt markets, let alone the stock market, people going for the stock market as a better hedge. They currently can't do that because, certainly in the US, because there's no regulatory clarity. There's no ETFs. There's no ways for them to actually do that and facilitate. They have to do interesting things like buy MicroStrategy. And we actually cover this article. You've then got global money supply, which sits at 82 trillion. You know, you've got GDPs, which we don't need to look at. But the S&P, for example, is 36 trillion. How much money is going to flow out of the S&P into crypto when these sort of institutional players are allowed to play to actually play in that market? Gold, for example, I think it's over 12 trillion today. Actual currencies. So this is what people think of as money. Global money supply again. You know, there's a hell of a lot of money. Real estate is sat at 326 trillion. There's a hell of a lot of money that can flow into this market. And I do believe it will. You know, this is the derivatives market. They reckon this is at 600 trillion. Derivatives are interesting because the problem with derivatives is there's never, even though in some cases they say there's never enough actual tangibles that back the derivative. So at 600 trillion, you know, let's say 1% of that flows in. That's 6 trillion. There's a lot of money out there. There has to be reason. Just because I'm sat here saying that, you know, there's a lot of money that could flow into the cryptocurrency market, there has to be a reason for it to do so. However, when you look at Bitcoin, one objective for fund managers is to hedge and to get exposure in the right places and to diversify. I do believe that Bitcoin and some of your layer one cryptocurrencies will become institutional grade eventually and actually added to their balance sheets as a play, certainly when they see positive returns coming as a result of it. There is a floodgate that is yet to be opened with regulations in the US that will open. And let me tell you, you get to be the individual that gets to surf that wave, being interested in the cryptocurrency right here, right now. On that note, I'm going to love and leave you. So we covered an ETF. We looked at some prior examples of ETFs and what they did to the market. That's still to come for Bitcoin. And I do also believe that you will have perhaps an Ethereum ETF. We already see it in Canada. And then actually coins like Polkadot, you know, Cardano, so on and so forth, ETFs into the future. You know, we had Nevada, which essentially, or NVIDIA, which essentially hit $1 trillion the other day off a $30 billion revenue. I believe that there are cryptocurrencies out there, certainly smart contract cryptocurrencies. And we heard Larry Fink from BlackRock talking about how everything is going to be tokenized. There's going to be, and it will be on potentially some of these platforms, there's going to be trillions of dollars transferred around the world and stored and kept on these blockchains. And they're valuable as a result of that. You know, as users grow, Metcalfe's law, so on and so forth. It's a very interesting time that we've got ahead, and it's nothing short of exciting being interested and involved in the crypto space right now, looking into the future. All I've got for you on that note, if you've enjoyed the content, like is always appreciated. So as a comment, I'll catch you all in the next one. Thanks a lot for watching. See you in the next.